Hi everyone, how are you? I hope all of you are doing really good. So finally, the costing paper January 2025 attempt is done and dusted. Please let me know in the comment section how was your paper. So this is a short review video on how the paper was, and not the detailed solution video I would say, but a quick review that what institute has asked. Right, so let's see quickly. According to me, this was an average paper towards easier side only. Right, there weren't too many difficult things in the paper, but yes, then if you are clear with the concepts, if you have worked hard on the concepts, then you would have been able to attempt this paper quite well, I would say. Right, so let's quickly have a review of the paper, that which chapters they have covered, what they have been asking. The first was on the labor costing. MCQ labor costing, right? That the data pertaining to worker C in a factory depicts that he is paid at a rate of ₹100 per hour. This is the normal wage rate that is given, and a week comprises of 48 hours for 6 days work. The allowed absence time is 15 minutes per day for maintenance, etc. So this is what? This is the normal idle time which is given to you for per day. So for 6 days, the normal idle time will be 90 minutes, or we can say 1.5 hours. Right, 90 minutes or 1.5 hours. So the job card of the C indicates his chargeable time is scattered for two different jobs, J1 21 hours and J2 24 hours. Any unaccounted time is attributable for the power failure, which is an abnormal idle time. So what is the normal idle time here? 1.5 hours, right, multiplied by 100 per hour. So cost of normal idle time is 150. What about the abnormal idle time? Total allowed hours is 48. Out of that, 1.5 hours is normal idle time, that is for which is given 15 minutes per day for maintenance and all. So 46.5. Out of this, what is the time which has been charged to the jobs? That is 21 plus 24, that is 45 hours have been charged. So 1.5 is what? The abnormal idle time into 100, 150. So the answer should have been 150 and 150. Clear? So this is a labor costing question. Second question is not at all difficult. Budgeted production is given, actual units are given, fixed overheads budgeted are given, actual are given. So you have to calculate the fixed overhead volume variance. This was a simple question on standard costing. It wasn't a difficult question, right? The budgeted output is there, budgeted overheads are there, actuals are there. We can calculate, not at all difficult. Now, next one, two product section Y. Okay, this is on joint and byproduct. Net realizable value. In the 1.5 day strategy video, I told you that NRV is important. I told you NRV is important, sir. So this is joint and byproduct. Right. So in this, the further processing cost is given to you 6 and 5 for the two product. Sales value, that is the final sales value is given to you. 25% on the cost, net margin not relevant as such. Number of units are given, joint cost is given. So what you should have done is first calculate the net realizable value. Net realizable value is what? Final sales value. Final sales value minus FPC. That will give you the net realizable value. In the ratio of that net realizable value, distribute this 60,000. Then whatever the value that you get for Y. Now what is the requirement? Requirement is calculate the joint cost per unit for product Y. So by distributing 60,000 in NRV, what is the value of Y that you get? Divide by 8,000 liters, you will get the per unit value. Right? This is what you will get. Fourth question, calculate the standard. This is very easy. Again on standard costing, sir. During a certain period, 4,000 labor hours were utilized. This is the actual hours which is given to you. And the standard hours for actual production is given. That is standard hours for actual production is given to actual output is given. Efficiency variance is given 15,000 favorable. What is efficiency variance? Efficiency variance is standard hours minus actual hours into standard rate. Right, this is equal to, this is given as equal to 15,000. Standard hours are given to you, that is 5,500 minus actual hours are given for 4,000 into standard rate is equal to 15,000. So standard rate from here will be 15,000 divided by 1,500. right? 10 rupees per hour. Very simple, straightforward question from standard costing. A company is analyzing the inventory management practices and has determined that the EOQ is 400 units, the cost incurred for placing a single order is 25, and the total demand for the year is 8,000. Calculate the carrying cost per unit. Carrying cost per unit. So what is the formula for EOQ? EOQ is equal to under root of 2 into annual demand is 8,000 multiplied by 25 divided by carrying cost per unit per annum. EOQ is given 400. So what you should have done is 400 is equal to under root of this. Take the under root to the other side. 1 by 2. Right? So using that we would have calculated this value of C. Clear? So this is how it will be done. Then case scenario 1 is on activity based costing. Production volume is given, direct material per unit, usage is given to you per unit, not the cost. Labor hours per unit, the usage is given to you, not the cost. Then machine hours per unit, number of production runs, then activities are given, cost is given, cost driver is given, price of raw material per kg is given, and the direct labor cost per hour is given to you. Then you have to find out on the basis what is the cost driver rate for machine setup cost. Machine setup cost is total cost divided by total number of production runs. Right? Total number of production runs. That will give you the cost driver rate. Right? Like total number of production run is how much? 50 plus 60 plus 65. 50 plus 60 plus 65. 175. Right? And the cost is given 49,000. So it will be 280. So this is how you have to calculate using the activity based costing. Not at all a difficult question. Simple activity based costing question. Right? So case scenario 1 is on activity based costing. I hope all of you must have attempted it correctly. That's why I'm telling you this paper was average but towards the easier side, not the difficult side. Right? So there is no as such difficult. Under the activity based costing, the amount of allocated overheads attributable to the machine running hours to product X. Calculate the cost driver rate. Right? Cost driver rate, machine running cost on the basis of machine hours. Calculate the total machine hours. Now the machine hours per unit are given to you. Here if you have committed a mistake that you have taken this total only, then it is wrong. You have to first calculate the total machine hours for the total number of units. That total, then machine running cost divided by total machine hours for all the units. That will give you the per unit. Right? Then you have to multiply it with this machine hours per unit, then you will get the right answer. Right? So these are the small things you have to be careful about. That's it. Otherwise it was not difficult, sir. Then next case scenario 2. It is on what, sir? Case scenario 2 is basically on budgeting. This case scenario 2 is basically on budgetary. Right? That produces the product P. The cost accountant of the company has to prepare the budget for a particular period. Yes, sir. It is on budgetary. That's what I am telling you. The following information, the expected sales is given 1 lakh units at a selling price of 50. Each unit of product P requires 3 kg of raw material Q, 4 kg of raw material R. The expected stock levels are given to you beginning of the year, end of the year. Raw material Q cost this, R cost this. It requires 10 minutes of labor time. Right? Variable cost, fixed manufacturing, fixed administration expenses are given. The total cost of purchase of raw material Q. Now for the purchase, you have to consider this stock also. What is the total consumption that is required? Right? Total consumption of Q required is 1 lakh units into 3. Total 3 lakh kg is required. Out of that, some closing stock is to be kept. 20,000 is the closing stock to be kept and 26,000 is the opening stock which is there. So how much is the material that you are going to purchase, right? So this thing you have to see. 3 kg, each unit of product P requires 3 kg. Yes, sir. But at the same time, one more thing, sir. One more thing. The consumption will not be based on 1 lakh units. This is again a mistake. It is not going to be 3 lakh. it is to be on 1 lakh plus 15,000 minus 12,000. Based on that, you will calculate the consumption. The consumption is also not going to be 3 lakh rupees, 3 lakh kgs. The consumption is going to be 3 kg multiplied by 1 lakh units you want to sell, 15,000 closing stock you want to keep, minus 12,000. So it will be on 1 lakh 3,000 units. Right? So accordingly, you have to calculate the total cost of raw material purchase. Right? So it will be 3 into 1 lakh 3,000, that is 3 lakh 9,000. 3 lakh 9,000 plus 20,000 minus 26,000. I'm talking about Q only. 3 lakh 3,000 and what is the cost 2 per kg multiplied by 2. So it will be 6 lakh 6,000, I guess. It will be 6 lakh 6,000. Right? So these are the small things that you have to see, sir. The consumption of the raw material is not based only on the sales. It is on the base of what you are going to manufacture, produced. 1 lakh plus 15,000 minus 12,000. So small things that you have to be careful about. Clear? Okay. Now this A part, XYZ company has an option to buy any of the two machines N and M. It is on marginal costing basically. It is on marginal costing. Right? That they are evaluating two machines. For machine M, the data is given 50,000 components it can produce, 1,50,000 is the fixed cost and the profit is given 2,25,000. From here we can calculate contribution, yes or no? Contribution, fixed cost plus profit, yes sir. Contribution we can calculate. Contribution per unit we can calculate, yes sir, 3,75,000. Similarly for machine N it is given to you. Selling price is given to you. Calculate the break-even sales in value for each of the machine. For value, what you need? Fixed cost divided by PV ratio. For PV ratio, what you need? For PV ratio, you need contribution divided by sales into 100. The selling price is given to you. Right? And the contribution that this from the machine M could have generated, we can calculate as fixed cost plus profit. Similarly for machine N, we could have calculated the break-even sales. Then sales where the both machines are equally profitable, indifference point. That is the difference in the fixed cost divided by variable cost per unit. That will give you the indifference point, sales level where both the machines are equally profitable. Next is B part is on batch costing. This is on batch costing. In this question, I know most of you would have attempted well. Direct material cost per batch is given. Labor cost per batch is given. One batch is of 2,000 units. Expected rejection is there. Scrap value that will reduce your cost. That will reduce your cost a little bit. Fine, sir. Selling price per good unit is given. Total available machine hours is given. Overheads per month is given. Fixed overheads are given. Batches manufactured 10 batches. Overhead absorption rate is 120 per machine hour. Now, here you might have committed a mistake if you are not reading the question carefully. You might have taken overhead absorption rate variable. You will be taking material cost, labor cost and overhead absorption rate multiplied by 3,000 hours. No sir, it is wrong. It is wrong. Why it is wrong? Sir, this is per batch. This is per batch and 3,000 hours is not per batch. It is for per month and in 1 month there are 10 batches. So this 3,000 is for 10 batches. You have to calculate for one batch. That is 300 hours for one batch. So if you are calculating the cost for one batch, because he is asking for the contribution per unit of good units after adjusting the rejected units and the company's total monthly profit. When he is talking about monthly profit, you have to show it for 10 batches. But for the first part, for this contribution, if you are calculating if you are taking the material and labor per batch, then overheads should be 120 multiplied by 300 hours. Right? Let me know in the comment section if you have committed this kind of a mistake. That's why I told you, practice and read the question very carefully. Next one. This is very simple. Material costing question, sir. Material costing question. The cost accountant of the manufacturing concern has given the following details. Difference between the minimum lead time and maximum lead time is 4 days. Right? Then average lead time to procure the raw material is 7 days. Now he's saying maximum lead time minus minimum lead time is given as 4. Average lead time is minimum plus maximum divided by 2. Replace the first equation, that maximum minus minimum is 4, right? Then average is given as 7, and average is what? Minimum plus maximum divided by 2 is equal to 7. Minimum plus maximum is equal to 14. So put this equation in this, calculate the maximum lead time, minimum lead time. From there, reorder level is there, reorder quantity, minimum stock level, maximum stock level is given to you. Consumption per day and minimum consumption per day, it can be calculated. I think somewhere this question was there in one of the RTPs, or somewhere it was there. This kind of a question was there. So it wasn't a difficult question on material costing, just the basic application of the concepts. Then this was a cost sheet question, very simple, straightforward question, not at all difficult. For raw material and WIP, opening and closing balances are given. Then raw material purchased inclusive of GST ineligible for ITC. ITC is not available, so you have to take the full value as a cost. Packaging cost, primary packaging cost, where you have to take, I have already told you, right? Cost of production, fee paid to independent directors, general administration expenses, production bonus paid to factory workers, direct wages, job charges paid to job workers, this is your direct expense, salary paid to supervisor, factory overheads, wages paid to factory workers, direct wages, salary paid to production control manager, factory overheads, sale of scrap generated during manufacturing, cost of production, selling overheads per unit. So this is your selling and distribution expenses, salary paid to general manager, general admin overheads, cost of sales, freight inwards, this will be your RM cost. RM cost, expenses paid for the quality control check, cost of production, right? Then depreciation is to be taken 10% on the written down value. Stock of finished goods on 1st of April, that is opening stock is given. The entire stock was sold during the year. Closing stock of 7,000 units, which is from the fresh production. That means you have to apply FIFO method here, not the weighted average method. During the period, 4,50,000 units were sold. Wants a profit of 20% on the sales, that is 25% on the cost. And depreciation, factory building, take it in the factory overheads, plant and machinery, take it in the factory overheads, and office building, take it in the general admin overheads, cost of sales. And depreciation on the written down value, that means this was relevant. Percentage to be calculated on WDV. Clear? This was a cost sheet question. Then Halsey and Rowan question. A straightforward question, sir. Such a straightforward question we can't expect. Labor costing. Labor costing 5 marks. This was a free fund 5 marks, sir. Halsey plan, Rowan plan, time allowed, time taken is given. 3 hours is time saved. Calculate the total earnings under both the plans. Sir, what can be a simpler thing than this? Time rate per hour is given to you. Sir, institute is in some really easy-going mood, isn't it? Then process costing, also not a very difficult question. Process costing, the preparation of process accounts, not the statement of equivalent production which we normally expect, right? Process X, process Y, direct material, labor given, process plant time is given, that is also a direct expense. Expected output, 75% of input, actual output in the kgs, right? And then expected is the remaining will be the normal loss. 25% is normal loss, and here 20% is normal loss. Actual output, then you have to find out if there is abnormal loss, abnormal gain, or something of that sort. Realizable value of the normal loss is 8 kg and 5 kg, right? Then departmental overheads for the period were 30,000 and is absorbed in each process on the direct labor cost. Distribute on the basis of the labor cost. Process plant time represents the attributable plant runtime with respect to each process and is a part of the direct process cost. That's why I told you it is a direct cost, direct expenses. Assuming no finished stock, work in progress either at the beginning, prepare process X account, Y account, normal loss account, abnormal loss account. Very simple, sir. Input is 1000 kg, 25% is the normal loss. So we were expecting what? 750 kg. Right, but actual output is 700, that means 50 kg is abnormal loss in the first case, abnormal loss. Clear? So this is how you have to figure it out. Next process 700 kgs, 20% is the normal loss. So minus 140, 560, actual output is quite high, right? Okay, 700, not from the previous process, 700 kgs is 90, 120 hours, 80% of the input is the expected output. So expected output is 560, yes, they are getting an output of 1150, sir. Oh, sir, too much of it, and it is an abnormal gain account, right? Then this question is again on the budgetary, sir, that some information, variable cost is given to you, fixed cost is given, selling price is given, expected profit for the coming year is given to you. The management could sense a stage of stagnation, and if they reduce the selling price by 10%, percentage increase in the sale in the units from the sales level, that would generate a 8 lakh profit. Now you have to see what is that sales level which is expecting a profit of 8 lakh rupees. This you have to calculate first, the sale units, using all the information that is there, right? From total cost and everything, we will figure it out that what could be the number of units, right? Then calculate the effect on the profit under each alternative and recommend which alternative is most likely to be adapted to get the maximum profit. Now fixed cost is there, variable cost is there, something we can do with the selling price per unit minus the variable cost, that will give you contribution, minus fixed cost, maybe some profit is there, expected profit, because the number of units are not given to you, right? So from there, somewhere we have to calculate the number of units from the sales level, because he is asking for the sale in the units. Or what could be the simple way, sir, in which we could have find out the units? Let the units be x. Then what is the total cost? 200x plus 100x, right? Plus 16 lakh is the fixed cost, plus this is your total cost, plus profit is 8 lakh, minus total sales value of 800x. Calculate the value of x from here. Calculate the value of x from here, right? So it will be 24 lakhs is equal to 800 minus 300, 500x. So x will be 24 lakhs divided by 500, 4800 units. 4800 units at which you are expecting a profit of 8 lakhs. Now you can do the percentage plus and plus minus whatever is given. You have to again find out what is the impact on the profit under the each alternative, that if you reduce the selling price, right, your units will increase. Now just accordingly you have to just prepare the statement and see the impact on profits. That's it. You have to prepare the profit statement. The only point was calculating this number of units. That's it. Service costing question, simple, straightforward question, sir. Straightforward question. Nothing. We have done this question n number of times in the YouTube also. We have done this kind of a question, sir. So I'm not going to discuss. Very simple. Okay. Now, Element Foods, this question is good. Element Foods is, again, this is on absorption costing only, overheads question. Element Foods is a manufacturer of organic snacks. For the year ending 2023, the company compiled the following financial data. Opening inventory is given, closing inventory is given, raw material purchases are given, labor cost is given, production overheads are given to you, marketing and distribution overheads are given. In 2024, Element accepted a request for the bulk supply of their best-selling snack. The estimated cost for fulfilling this order is as follows. Estimated raw material cost is 3 lakh, labor cost 1,50,000, packaging and transportation cost is this. Element Foods allocates the production overhead based on the direct labor cost. So this is on the job costing basically. This is on job costing, not overheads. This is a particular job that they are taking, right? So production overheads, they are absorbed on the basis of the direct labor hours or what? Cost. Cost. Direct labor cost. So that means labor cost is 5 lakh, production overhead 2,50,000. So it is 50% of the labor cost. Fine, sir. And the marketing and distribution expenses as a percentage of the total production cost based on the previous year data. right? So production cost is what? From here you will calculate raw material consumption cost, labor cost, production overheads. That will give you the total production cost. On that basis you have to calculate the absorption rate of this marketing overheads. Then you have to prepare the cost sheet for this particular job with a margin of 20% on the sales amount. This is a job costing question, right? So the first part is to calculate the overhead absorption rates based on this data that is given. Once you have calculated the absorption rate, apply those overhead absorption rate to this particular data. Basic conceptual question on job costing. Okay, now this is a standard costing question. Standard costing question. The only thing in this question is total number of units produced and sold. This is the actual output that is given to you. Standard labor rate SR is given to you, right? Actual hours worked given to you 17,820. Superb. Labor efficiency is given 106.8% and labor rate variance is given to you. You are required to calculate small parts. The only thing is, sir, what to do with the efficiency? Now, just imagine one thing, just the basic thing, sir, efficiency is higher than 100%. So tell me, the standard hours for the actual output will be higher or less than the actual hours? If the efficiency is more than 100%, the standards should have been less or more. He is taking more time than the standards, or he is taking less time than the standards. If the efficiency is more than 100%, sir, the actual time is less than the standard. So combining this, what will be your standard hours then? 17,820 into 106.8%, something 19,000 something figure will be there. This was the only point, this B part. Rest everything you can calculate, I know. Rest everything is easy. Everything is given. Rate variance is given. You can calculate number of units. Actual output is given. Standard rate is given. Actual hours are given. The only thing was the calculation of the standard hours required for 7,000 units. Right? So basic application. What is the role of that efficiency? That's what we need to figure out. Sir, this was easy. Generalize the following transactions on integrated books they have asked. So it was easy. Define the spoil and part of a theory part for material costing. Defectives. If it is allowed, then it is a normal loss. If it is due to bad workmanship, abnormal loss. If it is due to inspection department, again it is an abnormal loss. Abnormal loss will always go to costing P&L account. This we have to remember, sir. Right, this is what is required to be mentioned. Then last is just a theory question. So this was a costing paper. Average towards easier. Definitely, if you are 100% clear with your concepts, you could have attempted this. The only thing is read the question carefully. That's it. Right? So please let me in the comment. Let me know in the comment section how was your paper. Detailed analysis we will, detailed solutions we will provide later on. As of now, it was just a quick review, quick analysis of how the paper institute has asked the paper. So average towards easier. That's my viewpoint. That's my viewpoint. You people might have felt the other way. Please let me know in the comment section what is your feeling regarding this. So see you guys. Till then, stay safe, stay healthy. All the best for your upcoming papers, and just go and give it your best. Whatever has happened in the costing, leave it. Prepare for audit and FMSM. All the best, guys. God bless you.